to you?
I'm comfortable either way. First, let me say thank you. And thank you to everyone who is online here. I see a few familiar faces, so thank you for making time. I guess I would say if there is a sort of a burning question for clarification, I'm happy to take those. But let me start, I guess, at the beginning, just to sort of situate ourselves and just remind ourselves that Canada actually has a system for tax filing that is based on self-assessment. This means that effectively, not everyone will end up filing a tax return. The amount of information that the tax agency is getting has improved significantly over time in terms of what we refer to as third-party reporting. But we still have a distance yet to go in terms of being able to see all of the information that might tell us about somebody's income sources and their financial situation purely from tax records. So we do also have a fair amount of discretion and choice built into our tax code. On one hand, your bank might be able to tell the Canada Revenue Agency what you contributed to your RRSP for the year, but the Canada Revenue Agency and the bank will not know what it is that you might prefer to allocate if you owe something, for example, to your home buyer's plan. So there's also sort of this imperative within the voluntary self-assessment system that is hardwired into how we design an awful lot of the elements of our tax code, because you have to make certain choices about the allocation of certain types of credits and benefits. And all of this is going to mean, of course, not everybody ends up filing because it is voluntary. Also, it's important to note, not everybody does have to file. In fact, if you've actually already paid all of your taxes at source, if you don't expect a refund, if you don't have certain forms of income, the Canada Revenue Agency does not actually require you to file a return. But if you are entitled to benefits, for example, child benefits, Canada Workers Benefit, and you don't file, then you don't receive the refundable tax credit and you end up as an eligible non-recipient in those programs. And eligible non-participation in turn waters down the real impact of what are really meant to be positive social programs that improve household finances and household income. So I really have three main questions I wanted to try and get through today. The first is the question of who are these non-filers and why is it that they might not be filing? The second question is about the implications of this for our estimates of poverty or income poverty in this country. So I will show you what it looks like in terms of two measures of poverty when we account for the non-filers, or at least account for the change in their income because they did not file and did not receive those tax credits. And then more broadly, talk about what are some of the implications then of non-filing and eligible non-participation for poverty reduction efforts. And if there's time afterwards, I might say a few words about the connection between third-party information and possibilities for reform of income security. I should also maybe just note that this is actually timely. I popped onto the House of Commons website to read the legislation for the new COVID benefits that have just been proposed. And I noticed that the legislation that's been introduced has now, compared to the COVID benefits that we were used to, so the CERB, then the CRB, the government has introduced a new administrative requirement. In addition to the usual ones that they were using before, they are now saying that you have to have filed a tax return for 2020 in order to get this new benefit. So it's interesting to see this creep in terms of the connection between tax filing and access to income supports, even during the pandemic. Much of what I'll be talking about today is part of the paper that I published with Saul Schwartz, which is available through Canadian Public Policy. Happy to share a copy, or you have the reference there. But I will also be talking about some work in progress and welcome your input and feedback on that. So let me talk about the main data sources. The first is the Survey of Financial Security, which is Canada's main survey of household income and wealth. We used the 2016 cycle of the survey. There are also cycles for 1984, 1999, 2005, 2012, and there is now a new cycle for 2019. And the survey consists of both person and economic family files. We obviously merged them so we can look at both the household or economic family variables as well as individual characteristics. And there is a variable in there that actually records whether or not StatCan was able to find a match for the survey respondent for T1, a T1 return. So it's a binary variable, yes or no. Did they find a record? And this is, you know, a really common practice with a number of surveys that StatCan is running now, of course. So to cut down on response burden, an awful lot of our income variables are now coming directly out of administrative records. In the case of the survey of financial security, however, the only administrative record match was the actual T1 return, so not information slips or other records that the tax agency might have on file. I should also note that the matching effort took place more than 12 months after the deadline for filing. So the survey was fielded in spring of 2016. The deadline to have filed for your 2015 taxes would have come later that spring, but the actual matching took place in the fall of 2017. So good reason to think that there may be some small number of late filers, but at least at the time, some, you know, more than 12, almost 18 months later, when StatCan went looking for a return, it did not appear that they were able to find one. As I said, StatCan is also using administrative data to cut down on the response burden on survey respondents. And so in terms of the breakdown of both personal and household income, this survey also lets us take a look at the benefit income. In the case of the survey of financial security, this is not directly observed on the tax return because, of course, benefits like the Canada Workers Benefit, the Canada Child Benefit, the GST credit are calculated based on the return, but are not actually taxable income, so are not reported on the return. And this means that StatCan actually had to impute these benefit amounts for all survey respondents, but they do so using the same formula that the tax agency would be using. But this does mean that we can directly observe the household amounts for those selected refundable tax credits. Like an awful lot of surveys that we all work with, there are some limitations. This survey does not cover the territories, anyone living on a First Nations reserve, or institutional populations. For our analysis, we opted to limit our main results to working age adults, 25 to 64. In a moment, I'll show you a graph of some of the age distributions of filers and non-filers, and I think you'll see why the results probably would have been skewed if we had looked at the full population. We also estimated household disposable income using a market basket measure concept for the 2016 thresholds. I'll say more about that shortly. And for figuring out access to benefits, we of course had to correct for the fact that CRA's definition of a family or a household for the purposes of benefits is not going to be the same as StatCan's definition of the economic family. So we did have to make a correction for that, leading to the fact that there could be more than one benefit unit within one economic family.
Jennifer, can I ask you a quick question?
Please.
Mikhail, so how does the linking happen? Is it, they're not using SIN numbers, are they? Or
they're using multiple variables. So they use SIN numbers, they use name, they use date of birth, they use place of residence, and they also do collect a very rough estimate of income. So they're able to use multiple variables. I will say since this study was done, StatCan has been really improving their matching environment. So now they can actually match probably on more variables, and they can match to records that would be like the T4 instead of just the T1 record. They had been doing that for census data for a longer period of time, but now they're starting, as I'm told, to apply that to more surveys.
But I should know this, but I don't. But even like with the census, does that mean they ask people their SIN number?
So my understanding is that yes, they do
Okay.
collect it for the but you have to, there's a consent, right? But they
Right.
get something like 97% of
Right.
survey respondents
Okay.
consenting to give that. Yeah.
Okay.
But you're right, this does create the irreducible risk of error that if I say my name is Mickey Mouse, you will never find my tax return, right? So yeah, and that is a source of error in our estimates that we're not able to control for.
Right. Right.
So the other data source that I will talk about very briefly, and this is part of the work in progress, is actually it's crowdsourced data, which I realize is, has all kinds of limitations, but it's a start. This is really meant to be more exploratory. So earlier this spring, I fielded an online survey of low and modest income adults in Canada. You can see there the income thresholds. So these are people who are not necessarily below the MBM or even the LIM threshold, although depending on household composition, many will be, but there's sort of that idea of like low income working poor. We got over 1,000 responses in early May and asked questions about did they file taxes, what knowledge did they have, sort of borrowing that concept of tax literacy from some of the work that Antoine Genet-Grégoire and Luc Godbout have been doing, and also asked them about their financial behaviors and beliefs about people's filing. I just wanted to say a few words about that. So asking somebody, hey, did you file a tax return for the following years, maybe already kind of towing up to the line in terms of their willingness to disclose accurate information, right? That's the nice thing about the StatCan data is that you can actually see, can you find a return or not? But not much opportunity to do that outside of, the government's access to confidential files. But then I think also asking the question, hey, why didn't you file, is probably going to elicit all kinds of problems with social desirability bias, right? So we try and deal with this kind of in two ways. The first is by having more of this factorial survey design. So you give people a battery of questions that are meant to cluster around certain concepts that you're trying to explore to see whether or not these kinds of answers are elicited by basically asking the question or asking people to agree with statements that you can group together to get at certain concepts, but also asking the question where people are asked to respond about why they think somebody else might not have filed a tax return. So the idea here is that they may be displaying some of their own personal attitudes and beliefs by attributing them to the behavior of others. And this is kind of the draft working model that I was trying to explore with the questions. So the very traditional model, of course, in all economic behavior is its cost benefit, right? That if the costs of filing a return exceed the benefits of filing the return, and you can have a flexible definition of benefits there and costs in terms of time, effort, all that sort of thing, then people may not file a return when the costs are greater than the benefit. There's also some work from behavioral economics that there may be some frictions or capacity challenges. So when people lack the information, or they can't get help, or they can't find the information they need, there's just too much, as Dilip Soman calls it, sludge in the way. So we have some questions around that. Of course, a lot of the standard literature around tax compliance has to do with exactly that, compliance, and that you assume if people are not behaving in a certain way, perhaps this is an issue of active avoidance. So that's the work from Andreoni and others. But if people think that they can protect some share of their income from taxation, then they have an incentive to not file. But that always treats that unclaimed or unreported income as a bit of a risky asset where they could get caught. There's also, I think, a question here about whether or not people believe around, I guess it's a locus of responsibility is how I framed it here. And it's a question here around, will people file if they believe that the tax agency could kind of do this work anyway, that there's really no additional value to the information that they would provide. Institutional mistrust is an aspect that the revenue agency itself has invested an awful lot of effort into trying to understand. That, in other words, if people mistrust the fairness of the tax agency or the fairness of the tax system, then they will opt out. And that certainly comes up in some of the work as well around tax compliance. And then, as I said before, there's that issue of late filers. And so, Derek Messicar's work on household income suggests that, yeah, there are some people who file late. His work suggests that they actually are not a significant share of the population, that it doesn't actually tend to significantly change our estimates around household incomes, but it is a dynamic. And so I also asked questions about this idea of sort of conservation, that in other words, it's a temporal issue. It's not that people never intend to file or are actively trying to avoid filing, it's just they haven't gotten around to it yet. So that's sort of the background data. So in terms of the results, there are really two ways of estimating non-filing. There's what I would call, I guess, sort of the macro matching approach, which is you just count up the volume of returns that the tax agency gets in a year and divide it by the share of the population that you think you're trying to measure. So when we do that, we end up with a national non-filing rate for all Canadians over the age of 15 of about 9.3% for the same year. There's a real challenge with this approach, though, because the volume of returns is also going to be including returns for people who have passed away in the year. And it's also going to be, when you have a population estimate of, say, 15 plus, you're going to be capturing an awful lot of Canadians who don't necessarily have a good reason to file. For example, they may not have income to report, but more importantly, there's no way that they have to access a benefit because they themselves are the child for whom the child benefit might be claimed, for example. So the micro matching approach is really the one that we take advantage of in the paper, which is what StatCan is trying to do in terms of individually matching survey respondents to a T1 return. And there we get a different estimate, sort of not orders of magnitude totally different, but we get a national non-filing rate for the full population of 13.7%. As I alluded to earlier, this approach does have the potential for error in terms of just errors in the matching system, right, or matching efforts. And there is also that source of the small number of people who may not have filed at the time that StatCan went looking for them, but may eventually file. We don't think that latter part is very big based on Derek Messicar's work. And with regards to the first one in terms of unobserved error in the matching, we don't really have any way of estimating that or controlling for that. And we have to believe that the stats agency is doing, really quite excellent, robust work in terms of trying their very best to find people in the records. Here is what the revenue agency itself is reporting by way of some kind of a macro matching approach to estimating non-filing. You'll see the wording here is kind of funny. It's percentage of Canadians who voluntarily participate in the tax system. I love the word voluntarily in there. It's doing an awful lot of work. I also happen to think that any time that somebody makes a purchase where they're paying GST, that they are also participating in the tax system more broadly. What CRA is doing here is saying that they are taking the 3-year rolling average of the volume of returns that they receive and dividing it by the population count for everyone over 15. And as I've mentioned, there are some real challenges with that kind of macro matching approach. But here's what Saul and I found. And you'll notice here I'm reporting instead on the filing rates. And you can see some of the differences first by age groups. So there's obviously some important differences if you're counting all persons 15 plus to, even if you move up to all adults 18 plus, that those 3 years actually make an important difference. And of course, because this is capturing an awful lot of kids who are dependents, right? Why on earth would they file? So why would we put them in our denominator? At the other end of the lifespan, you can see that the rates of filing for seniors 65 plus are really, really high. This is, I think, possibly for two reasons. Perhaps filing is a habitual behavior, and so by the time you hit age 65, you've had that many more years to build up the routine, build up the knowledge, the confidence, the experience, that kind of thing. And it's also possible that there's a cost-benefit effect here, given that if you are an OAS recipient who potentially might be receiving GIS as well, you know, for a number of those other income-tested benefits for seniors, you have a strong incentive, right? Just a larger share of your income may depend on actually having filed that tax return. So we, in the paper, decided to settle on focusing our estimates more on this working age population of 25 to 64, kind of in the middle ground. But you can see, even amongst youth, 18 to 24, the rates of filing are quite low. Now, the gap in between the top of our bar and that red line would be what, you know, technically is an implicit non-filing rate. There will be some error in there, but as I've said, we just don't know how much of this is due to error. Hopefully, as StatCan's records for the matching environment improve, that residual error will be smaller and smaller. Over here on the orange graph, we have the filing rates by household income grouped sort of by three different groups. So first of all, for families with an income underneath the market basket measure, then at 200% of the market basket measure, filing rates go up a bit, and they go up again for all other families that are above that 200% of market basket measure. So our real motivation in starting this paper was particularly worrying about people who are down in the lower income spectrums, because they may be materially worse off if they don't file a tax return, because they're missing out on important benefits that may leave them, it may leave them with higher income. Turning to some of our results, this is the marginal effects for just the working age adults of different correlates, basically amongst non-filers. And we did estimate the models separately for men and for women, because the literature had suggested that actually tax compliance and participation in the tax system has important gender differences. So these actually are separate models for men and women. The gender difference that we find just kind of across the board is pretty consistent with that past literature. And women just in general seem to be more likely to file and be more compliant when it comes to tax rules. This might have something to do with socialization. It might have something to do with risk aversion or loss aversion, right? That generally speaking, when it comes to financial behaviors, women tend to demonstrate more or less risk-taking behavior. So if you think that not filing or not declaring income is kind of like taking an investment risk, then that would make some sense. There's also some suggestion that there are potentially personality differences or personality traits or psychological traits. So for example, agreeableness, which women tend to have higher average scores than men, tends to be associated with more sort of rule following and a desire to get along. So anyway, we're not entirely sure kind of fully what's going on here, but this is this gender difference result was not totally surprising given what others have found on tax compliance. One really surprising result, though, you can see here with Quebec, which is actually that living in the province of Quebec makes you much more likely to be a filer than a non-filer. And you would think this is kind of counterintuitive, because you have to file two separate income tax returns in that province. So the costs in terms of time, effort, cognitive load, the whole thing ought to be higher. On the other hand, maybe the incentives to file in Quebec are also stronger, maybe because the value of their income tested benefits might be greater, right? That if you, for example, are a family with kids, looking at childcare expenses, well, if that's income tested in some way, then maybe you have that incentive to file. We also learned that the Quebec tax agency tends to impute federal benefits even if you haven't received them. In other words, they'll just attribute that to your total income and adjust the provincial benefit regardless. So, you know, maybe it's sort of a carrot and stick issue here, that if the government is going to treat you as though you have filed, then you might as well file and claim those benefits.
But Jennifer, the estimates are negative for Quebec, so I'm trying to understand.
I'm sorry, these are the marginal effects of, so by being in Quebec, you're less likely to be a non-filer.
Sorry, I interpreted that incorrectly. Thank you.
Sorry, I should have made that clearer. So the presence of kids also seems to encourage people to file. Again, this would be pretty consistent with that cost benefit model for filing, like just the value of child benefits compared to the other refundable tax credits that we could observe directly. You know, they're significantly higher. And if you are a family with kids in Canada, even back in 2015, this is the tax year that we're looking at through the 2016 SFS, you know, about 95% of families were going to be eligible for at least $1 in child benefits. But what's kind of interesting here is that you see the interaction again of gender, that actually the presence of kids is important for moms, but not for dads. And the effect is there for moms across different family types as well, in a way that just isn't the case for dads. Another surprising finding for us was that income was not particularly important, actually. So given that we had found, you know, that kind of that gradient, that people who were below MBM were much less likely to file compared to people who were at 200% or well above 200%. But it seems as though actually there's enough of a distribution of non-filers up and down the income range that the result ended up not being statistically significant. So sort of some puzzles there as well. Here we think that there may be some differences in why people are not filing. So it's possible that higher income people are more likely to be engaged in active avoidance, right? Protecting those larger risky assets that they've got a higher tax liability if they do file. Whereas lower income people are maybe perhaps more likely to be facing those capacity challenges in terms of access to help, right? And to the adequate information to be able to file.
So are there people with no income in the sample?
Yes. So the question around filing was not conditional on whether or not somebody had income. And of course, if you're take the case, for example, of a couple, right? If both people do not file, then they don't get access to those refundable credits, because the IRA wants to be able to say they've assessed the adjusted net family income, including both of the members of the couple.
So I guess I'm just trying to get a sense of how much of the non-filing is people with just zero income. Like, how predictive is that in this model?
So we did not, just because actually the number of people who have zero income is actually small. It's really small. Okay. So we couldn't actually get estimates out on that. But it's yeah. Okay. Like what we find is that there are a lot of non-filers who have low income, but then there's also some middle and upper income non-filers as well. Yeah.
Thanks.
Jennifer,
okay. Yeah, please.
Sorry, I don't have my glasses on, so I apologize I'm squinting at my screen here.
Oh no.
I'm just thinking, I'm adding up here what's going on with the single moms. That seems to be, it seems like there's no difference here between being single and being a single mom. Is that right?
This is you're looking at the column for women? Oops, what have I just done?
Oh, you know what?
Uh-oh.
Okay, yeah, no, you're right. I was looking more at the men and looking at those numbers, but
okay.
I can see them a bit better now. Sorry to interrupt you.
No, not at all. And I'm sorry, I don't know what I've just done.
Oh.
That I've now made my screen smaller. I don't know. Did everybody else just see that the slide went smaller?
It looks fine here.
Does?
Looks same
Okay.
here.
Same? Okay. So it's just
Yep.
me then. I'll just be squinting at the screen a little more then. Okay. Okay. So these are some very preliminary results from that second data source that I mentioned. This is the crowdsourced data from back in the spring. And this first graph is the results for the question, did you file for each of these 5 years? And what I found is that across all 5 years, there's this, non-trivial share who say either that no, they haven't filed yet, and even many who are willing to say no, and I probably won't do that. Obviously, and this is kind of encouraging actually, the people who aren't sure whether they filed or not is bigger when you're asking them about many more years ago. So that's consistent with sort of the importance of recall. And it might be easier for them to remember last year versus 5 years ago. In terms of the results from that, the questions about motivation or reasoning for not filing, this is a first cut at kind of an analysis of the clustering of those responses. And basically what we see is the mistrust of CRA is actually maybe the sort of the leading factor that emerges. So these are questions, or these are people who are agreeing with statements like bad things can happen when you file. I don't trust the tax agency, or maybe they don't trust the tax agency. Those kinds of things. If we have time and people have questions later, I'm happy to pull up the full list of questions. But conservation of effort also seems to emerge, which might be important in terms of thinking about people who just haven't filed yet, right, but may intend to do so at some future date. What I found really surprising, however, is that there's not an awful lot of love for sort of the traditional cost benefit model, right? That it's not necessarily, people seem to be of the view that it's very costly or time consuming to file a tax return relative to whatever benefits you might get access to. On the other hand, with regards to questions like, do you need to file a tax return in order to get the Canada Workers Benefit or in order to get the GST or HST credit? There was an important share of respondents who did not know that actually filing was required in order to get access to those benefits, and another share that were just really uncertain. So people's ability to weigh the cost benefit ratios here may not be, it may not be kind of using full and accurate information. Oh, there we go. Okay. So moving to the second question about whether or not all of this non-filing has any impact on our estimates of poverty. So we use two different measures of poverty in the study. There's the market basket measure, which is now, of course, Canada's official poverty line. And that's a concept of disposable income. So you take total household income less the non-discretionary spending, and you end up with this disposable income concept. If that disposable income concept is less than the applicable market basket threshold, then somebody is in poverty. So it's an absolute approach to measuring poverty. The low income measure, on the other hand, looks at the total of total income and then takes 50% of the median. If somebody's income, if the household's income falls below that, then they are also in poverty. There are sort of with these two different ways of measuring poverty, also sort of two different ways that non-filing might be impacting our poverty estimates. For the MBM, when we impute benefit income to non-filers, and of course that's what StatCan does. So if they can't find your tax return, they work out to their best of their ability what your income would have been, including all of the refundable tax credits that are tied to filing, and they add that in to your household income. So when we do that, there's a possibility that we're actually inflating the real incomes of people. So the poverty threshold itself isn't impacted because that's measured as a reference, reference to a basket of goods, but the household income concept that is compared to that threshold might be higher when we're imputing the benefits that aren't actually received by non-filers. For the limb, StatCan's practice is to only calculate the limb on tax filers, so the people who do show up in the T1 returns. And so we might be altering the threshold itself when we leave out non-filers. And here, depending on what you believe about the income distribution of non-filers, the impact could be either to raise or lower the limb threshold, or, if their income distribution is largely similar to filers, then it probably wouldn't have much impact at all. And so here's what we find in what Saul and I find in the paper with regards to how non-filers would impact the rates of poverty using MBM. So this is just for the population, that working age population, 18 to 64 in this case. StatCan does not have a separate official poverty estimate that we had access to for the 25 to 64. So we adjusted here to a different definition of working age. And you can see it's a small but not totally trivial change from an official poverty estimate of 11.9% to 12.6%. The overall number of adults overall number of adults below the MBM rises by about 38,000, and the number of kids below the MBM rises by about 34,000. So this is what happens when you count the non-filers in the overall estimates, but you take away just those 3 refundable tax credits. So GST, HST credit, child benefits, and what is now called the Canada Workers Benefit, which was at the time the Whitney. So in a sense, this is a way of kind of estimating how many people are in poverty just by virtue of the fact that they didn't file a tax return. I should point out that the SFS doesn't actually, or at least the 2016 cycle, doesn't actually have household MBM status from StatCan. So we had to do the work ourselves to try and estimate that disposable income concept using the information that was in the file. And I guess the good news is that the technique we used ended up working out not too badly, because this is the estimate. You can see there it's almost bang on to what the national estimate was. So that was kind of a bit of good news. There's maybe a way to actually add in MBM thresholds or MBM variables, even if the survey doesn't come with it. Okay, turning to the limb, we see a much bigger difference between those adults with almost it's almost actually a 2.5 point increase over the official limb poverty rate. And I guess I should also caution here, though, that the limb that is calculated within the SFS is also different than the official poverty rate. So you can see official poverty rate 12.4. If we calculate it only on filers within the SFS, we get 13.5. When we take out the benefits from non-filers in terms of their income, then we end up with a poverty rate of 15%. I think that some of the difference here between the internal SFS estimate of the limb versus the official estimate of the limb is that StatCan oversamples in high income neighborhoods because it's a survey of wealth, and it's often really hard to get rich people to answer surveys about their money. So that's possibly part of the variation there. Okay, so what are the implications of non-filing for poverty reduction efforts? Well, we're seeing that there's a small but non-trivial impact in terms of the poverty estimates, whether we're using an absolute or relative measure of poverty. But there are some questions here, and this is really kind of what Saul and I were initially motivated by, is that if people aren't filing and they're not getting their benefits, that's a problem. On the other hand, a lot of the literature says the tax system is actually an answer in terms of poverty reduction. It's not necessarily the problem. So Robert Moffat points out that welfare programs are usually pretty stigmatizing. They discourage participation, maybe on purpose, frankly, because people are made to feel bad for using them. And welfare administrators, make you go into a particular office where everybody knows that's where you apply for welfare. You get heavily surveyed while you're on benefits. But filing a tax return is, it's something that we expect a lot of people to do at all income levels, so it shouldn't have the same problems of stigma. Welfare administration can also be really, really costly. So Janet Curry points out that separate from the costs of stigma, there are these administrative systems and welfare programs that are costly in other ways. There's the costs of learning that a program exists and how you're going to qualify. There's the cost of the time and the effort to apply and stay in compliance. I would also add, although Janet Curry's work doesn't talk so much about this, that there's also the administrative and compliance costs to the public that are kind of important here too. So while CRA spends just over $3 billion to administer a little more than $35 billion in combined federal and provincial benefits every year, that's like less than 10 cents on every dollar of benefits going out in terms of administrative costs. That's pretty lean. Just for comparison, I happened to look up the welfare administration costs from the 2020 budget for the region of Waterloo, and there it costs $34 million to administer $98 million in provincial welfare benefits locally. So that's about 35 cents on every dollar of income support paid. So you can kind of see why, already just for stigma and costs, running an awful lot of your poverty reduction programs through the tax system should be, this should be good, right? This should be solving real problems. And then behavioral economists like Carleton, Melanchthon, others have said that relative to the individual and social costs of having some kind of standalone benefits agency, paying people through the tax system where they're already interacting with this system, it just seems like a better, more efficient bet. We asked in the paper how much money people might be losing out on when they don't file a return. So I've already shown you the impact in terms of poverty estimates. This is the mean and then median amount per benefit unit by different household composition and across the different 3 refundable tax benefits we were able to look at. In some cases, the amounts that are foregone are actually zero, right? Again, because some of those non-filers have incomes that are too high to qualify for benefits. In other cases, if you look at, for example, singles living alone, the amount of WITB, it's now the Canada Workers Benefit that they would have qualified for at the mean is only $77. So, maybe if the costs of filing your return, once you add it all up, are greater than $77, maybe it just doesn't feel like it's worth it to do that. But these small amounts actually do seem to add up. We find that the sum across all non-filers is about $1.7 billion for 2015. And as you can see, for families with kids, just because of the value of child benefits relative to some of these other credits, these are pretty substantial amounts of a couple of $1,000s that could be important to households' welfare and well-being. And I think it's also worth mentioning, since the 2015 tax year, these benefits, these 3 refundable tax credits, have all grown pretty significantly in value. New benefits have been added. I mentioned today the new lockdown benefit is going to be conditional now, it seems, on having filed a tax return. There's a proposal to create a new Canada Disability Benefit, where it may or may not integrate with the tax system. So there's this really important role that the tax system and CRA are playing in terms of the delivery of income supports and in poverty reduction policies. The CRA actually does have 3 different ways that it is influencing anti-poverty programs. The first is the direct administration over those benefits, which I've mentioned. The second is that CRA also acts as an information source for other departments and agencies. So, for example, Employment and Social Development is in charge of running a program called the Canada Learning Bond, but it's income tested. So if a family does not file a tax return, then they are not flagged as eligible for this learning bond to ESDC by the tax agency. And then CRA, of course, also plays an important role in terms of integrity measures with regards to other benefits. So sort of policing workers' compensation payments. If you've ever taken out a student loan and are in repayment, you know that CRA also plays an important role in terms of compliance there. But more than these cash benefits federally and the ones that the federal government administers for provinces, there are other aspects here in terms of anti-poverty measures that are influenced by whether or not somebody files a return, because T1 information has really become the preferred way for a lot of governments to verify income for a wide range of income-tested public goods and services. So in BC, this is how your income is verified for the Affordable Childcare Benefit. For people who live in Manitoba and might be applying for Rent Assist, they have to be able to provide proof of income from the Revenue Agency in order to get access to the income-tested pharmacare program and PEI. It's the same thing. You know, the list sort of keeps going on and on and on. And so one challenge to the effectiveness of any anti-poverty program will be the degree to which it's assuming tax filing as long as we continue to have voluntary filing. So it's pretty clear the CRA is not really set up to be an anti-poverty agency, even if it is playing this really important indirect role in anti-poverty programs. CRA has, I think, realized that it has an important role in encouraging people to file a tax return in order to get access to benefits. It has, I think it's fair to say, made some efforts, although somewhat modest, right? So if you've filled out a tax return using software lately, you'll notice you actually didn't have to do as much work to fill it out, right? That the software spoke directly. If you had a My Account and it just pre-populated a whole bunch of the fields for you. About 40% of returns are able to use that now. There's the File My Return service where CRA says, hey, just call us and we'll do it over the phone for you. That only hits about 0.2% of returns. Community volunteer income tax sites have been running for about 50 years. In a non-COVID year, they had been serving up to about 800,000 Canadians. The eligibility criteria, though, to have your tax return completed by CVITP is pretty rigid, though, and it seems like this program is kind of fragile. None of the clinics are really receiving much support, except for some new tiny micro grants that CRA has introduced this year. The agency has also experimented with doing things like sending letters to people to say, hey, you haven't filed a tax return, we'd like to pay your child benefits, would you like to file, please? They only get about a 12% response rate to those. Similarly, on a different initiative to try and get people with simple returns to file, they only got a 5% response rate. So you can actually kind of think of these as being a bit of a shift away from a pure self-assessment way of administering taxes, which should improve filing, but there's still this irreducible need that's left to be able to file a tax return in many cases, even if the tax agency actually has all of the information that it might need, which is not actually how this works in some other countries. This is also a visual that's from work in progress, and so comments and feedback would be very, very appreciated. So if you think about sort of a pure self-assessment system, which is where the tax agency has very limited information, and you as the taxpayer really have to assume a lot of responsibility, but also high agency in terms of what you choose to tell the tax agency. That's, you know, maybe kind of historically where Canada started. But as we've moved to a system where CRA is now getting more and more third-party information, so if you're on social assistance, they get your T5007. If you have employment income, they're getting your T4s. If you've made investment income, they're getting some of that information from your financial institution. You know, for more and more of us, we are moving towards this sort of self-assessment with important amounts of third-party information, which, you know, allows CRA to do a better job in terms of policing and compliance, allows for some of those convenience factors of pre-filling in tax returns, but it also does mean that the revenue agency has more information about you and could potentially determine benefit eligibility, even if you haven't filed a tax return. But that's just not how we're currently running any of the programs, right? We're still saying, even if the tax agency already knows, you still got to file. In other countries, instead, they approach this in a slightly different way, where the tax agency actually has really good information, and it's tax agency reconciliation. So in some cases, the tax agency does complete the return, calculates your liability, sends you a form. You still have to sign it, so that's the required acceptance. In other systems, if you do not respond, the tax agency simply says, we're going to treat it as though you have filed, since you have not objected to the information we've got. We just deem that you've filed. And then finally, for those of you who are familiar with the UK, an important share of their population never sees a form from the tax agency, never does a return, nothing like that at all, because they basically just have this return-free exact withholding for, it's about, I think, 70-ish% of their population, where the money is just withheld at source, and any benefits and credits are calculated automatically. I think it's important to say that there is, within any given country, there's going to be some variation. So as you see, people who have, for example, complex income sources or self-employment, they're even in the UK, they will not get to participate in this part of the system. Filing taxes is not inexpensive. This is the Accounting Services Price Index maintained by Statistics Canada, and you can see over time that the tax preparation, the indexed cost of tax preparation for individuals has climbed significantly over time. And so I think there's an important question here about whether this is creating barriers for the low-income people whose income is actually dependent on filing a tax return. And it's not, as I said before, just their dependence in terms of income, but also access to affordable rent, pharmacare, childcare services, and so forth. Yes, there is a market, of course, in Canada and in the United States for tax filing services. Some software providers will provide some free services, but those tend to be quite limited. So we've got a market for this service of helping people to connect to the tax system and file a return and access benefits, but it's not a frictionless one, and it's not necessarily one, obviously, that is set up well for those low and modest income people who could stand to benefit most from filing a return. So, implications in terms of poverty reduction. There are clear incentives to want to use the tax system over traditional welfare services, but when our tax administration assumes voluntary self-assessment and assumes that the market for tax preparation services is well functioning, we may be in a situation where we've got some important trade-offs here, that namely the people who could benefit most from filing are the least well served. I know I'm just about out of time, so perhaps I will skip ahead to some interim conclusions. So there is some potential, I think, for adjustments to our poverty estimates, depending on methodologically whether we're making decisions to include non-filers and how how we're treating their benefit income within our poverty estimates. That record matching environment that StatsCan has been investing in is what is really key here. So as they are better able to find more income information, that error risk should go down. There's also, of course, the risks here of the eligible non-participation in programs. Since the 2015 tax year, there have been important changes, for example, to the Canada Workers Benefit, such that there's no separate form now. Whereas, in the 2015 tax year, there was a whole separate schedule that somebody would have had to complete in order to access that benefit, even if they were filing a return. That is now moved to auto enrollment. So this suggests, actually, it's an improvement, but our results suggest that if you still can't get people to file a return, auto enrollment that relies on the return mechanism may not be sufficient for closing the gap on eligible non-participation. And this also, of course, has important implications for how we think about doing program design. Advocates who are interested in basic income, or just researchers who are also interested in forms of basic income, often see the tax system as being a potential for the delivery. So I think the fact that there seem to be some important share of Canadians who aren't filing a tax return is going to have implications not only for the accuracy of estimates of the cost of a basic income, but also for its administrative design if you're counting on people to be able to file a return to get the money. As I said, CRA has this kind of outsized role then in terms of poverty reduction, whether it wants it or not. It is pretty good. It has shown itself to be pretty good at cutting checks to people when it can figure out the amount of benefits and largely automate it. But it is still hampered as an agency when it doesn't have good information in terms of non-filers. As the role for third-party reporting expands, and as we maybe see the tax agency move into more of those spaces like file my return or pre-completed files, that gap may close. One very straightforward place for them to start would seem to be people who are on social assistance who may not be filing a return. John Stapleton has done some work in Toronto that suggested as many as a third of people on Ontario Works were not filing a tax return. This would mean they've obviously been missing out on certain benefits. So, you know, there's some real policy room here for CRA to make some strides by doing something closer to tax agency reconciliation for those people who are on social assistance and may not be filing. I think I am now out of time and want to leave time for questions. I will just leave this slide up, though, Stephanie, because I know you wanted me to talk as well about potential future work in the RDC, so I'm happy to talk about this as well, but also just happy to take questions from people about what I have spoken about already.
It's as you like, Jennifer. Really.
Okay. All right. Well, I'll tell you what, I will take 1 minute and just mention this then. So the next phase of work that is planned is to go back to the RDC and use a different data source, this time the longitudinal and international study of adults, which is linked to T1 data. The nice thing about this compared to working with the SFS or the Canadian Income Survey is that this is observing the same people over time, which means that you can actually see for those who don't file a tax return, or at least where we cannot find the linkage, is this a repeated issue? Like, is this habitual, or are there perhaps, is this something that's more sporadic? So the goal would be to confirm the estimates from that initial paper and take a look at, as well, at other characteristics of non-filers, because the nice thing about LISA is that not only does it capture some of the usual variables like household composition and income and employment and so forth, but it also means that we can take a look at some psychological variables. So self-reported stress, Big Five personality, so looking at that issue around, for example, agreeableness, and whether or not that might be important in terms of differentiating people who are, you know, regular, habitual, compliant tax filers to those who are not. LISA also does capture then some important life events. So perhaps if you've just lost your job or lost a spouse or suffered a critical illness, maybe that's a year that you don't file a tax return because you've got other things on your mind. So we can take a look at that. And then last but not least, one of the cycles of LISA also asks an awful lot of questions that I think will help us to group people according to precarity of their work. So control over their hours, control over their conditions of work, regularity of the pay, and so forth. So if this sounds a bit like I'm trying to describe gig workers, that's because I am. And I think that there may be some interesting questions there about trying to understand who those people are and whether or not they are actually showing up in our tax records or not. Okay, there. that was my more than 1 minute on future work.
Thank you,
So-
Jennifer. That's very interesting, and that last slide as well. Interesting to see what's coming and what else you can do. I open the floor to questions. You can unmute yourself. Feel free.
I'll start just before I forget, and you probably know this, but just in the small chance that you don't, the research you mentioned at the end there, Jennifer, make sure you talk to Yuri Ostrovsky at StatsCan, who's been
Yes.
thinking a lot about how to identify these gig workers in the tax data. They've done some excellent work, so that would be like a good starting point for sure.
Thank you.
The question, I guess I have a couple of questions, but I'm going to ask the first one, which is going to be a dumb question, I think, because it's so obvious, but I'm missing something fundamental here in how the system works. If the CRA gets a T4 that's high enough income that somebody clearly owes tax, and that person doesn't file, they presumably contact them, right?
So if it's a T4 situation, that means it's somebody who's been paid out of payroll, which means that they will have been paying as they earned.
Okay, so what if some other form that it hasn't been withheld at source and they clearly owe, they will contact them?
So yes, so take for example an independent contractor who was paid by a firm and a T4A is issued. If CRA says, well, we don't see that you've made any payments on this, or maybe that GST was paid and CRA wants their cut for sure, and they are well equipped actually to do collections. In another version of this presentation, I've shown an internal memo that has this lovely line from the CRA saying basically, we're used to contacting non-filers to get money out of them. We're not used to, and we're really unsure how to do this, contacting non-filers to give them money. This is a real change for us.
Yeah, this is exactly where I'm going. So the logical question is, why is that not, what is the issue with doing that? Contacting those folks as well?
That's not a naive question at all. It's a really complex question. I wish that I had an absolute clear answer. I am waiting for a response to an access to information request that I hope might shed some light on this. I think there's probably a couple of aspects to this. So I mentioned in passing that there is a market for tax preparation services, right? It's not necessarily a well-functioning market, particularly for these lower modest income people, but it's there. And there is a strong incentive for those competitive firms in that marketplace to not have governments take over their role, right? And so we've certainly seen, particularly in the US, an awful lot of ballot initiatives in California, for example, be defeated in part because of lobbying from those firms. So I think that's a factor. There's also, I think, the case that when the Canada Revenue Agency was restructured in the 1990s as the tax collection agency for federal and provincial governments, it really did focus on that collection part, right? It is a huge part of what that agency does. If you look at their internal allocations of full-time employees, you kind of have to squint to find the people that are in charge of running the benefit programs. Like they're few and far between. So they've really invested a lot of their institutional resources in the collections role rather than the benefits role. And then last but not least, I think that there may be some institutional attitude. Well, sorry, it's not an institutional attitude. There are individual attitudes, I think, with regards to people who are low income that are quite judgmental, right? And that if people have not even bothered to file a tax return, somehow they are not keeping up their end of some moral bargain, right? And you cannot just give people money, right? You have to make them do something in order to be
Right.
qualified for it.
Yeah. That's really interesting. This is really interesting. Yeah, those issues are challenges. It always makes me think of Norway, where you probably know every year they open up a website that you can go on and type in anybody. I can look at my relatives and get their full equivalent of their T1 tax records. But I mean, an intermediate step is you don't provide a full tax record, but you publish who didn't file or who did. That maybe
That
sounds
would be
completely crazy,
interesting.
but that's another response to this issue.
Can I jump in there? Just I think in what I was going to bring up as well as probably even more naive. Not sure why it wasn't mentioned, but there is a significant underground economy that also suggests that a reason for not filing is simply because. Right. So is there a way that you can get a sense of that as well? Or I know it's difficult to measure, but
Yeah.
and you haven't, I missed when you referred to it, and you talked about cost benefits analysis, but
Yes. Yes. And I'm afraid it's not, it's cut, the particular table that I've got here does not have the full list of correlates. So you're right that there is that issue of the underground economy. Certainly the Canada Revenue Agency has done estimates of the size of the so-called tax gap. They're really concerned about those people who, have income that they don't have a window into, or maybe fancy offshore accounts, and therefore it's, uncollected tax liability. And it's not trivial. It's not trivial. Not shown, unfortunately, in this table. We did take a look at income source. So obviously in the Survey of Financial Security, we're not really going to have much of a window into people reporting that, oh yeah, I have this under the table business. Don't tell the tax agency, right? Like they're not going to be reporting that. But we could at least look at the difference between people who have self-employment income, or where the self-employment makes up the majority of their income, because that's an area where just the possibilities of hiding more of your taxable income from the revenue agency are probably better. And certainly the studies, I think it was in Belgium, but it's by Cleven, was the researcher, found that, yeah, self-employed people are less likely to be compliant because they can, right? We actually, strangely, we didn't find, honestly, that self-employed people were significantly more likely than those with standard employment income to not be filers. So it's, it's potentially there. I've also heard anecdotally that people who have debts to the Crown, like outstanding student loans, may report feeling afraid to file. Or if you have unpaid child support, where coming above ground by filing a tax return could lead to penalties for you, that might be a disincentive. I think those are probably all true. The difficulty, of course, is actually finding the empirical evidence for it. It's a challenge. It's a real challenge.
I see Tammy has her hand raised. So do you want?
I was happy to wait. So along the same line of thought, I have a comment and not a question. But the information that I'm missing is about the extent to which all of these different agencies communicate with each other. And in the back of my mind, I'm thinking of that mistrust issue, right? If I'm a low-income person, I'm just waiting for these agencies to try and make my life difficult, right? If I report more to them and acknowledge my existence, they're more likely to start tracking me down and making life difficult. So, for somebody on ODSP who's a single person, if they start filing, it's just one more person making their life difficult. So that's something I don't know much about, right? How much cross communication is between that federal, provincial, municipal levels in terms of how things are administered and how they're auditing each other. And then the other thing, and I actually, this is just to emphasize why I think that's important. Like when you talk about the amount of social assistance in Ontario that is being doled out and how costly it is, most of that is coming through things like ODSP, which you can't do through a tax system, right? That's evaluating individuals' disabilities and things like that. So, you know, I would expect some of that to be easier to administer. But I mean, the folks that are easier to administer are the ones with kids. So they're filing that piece of it. But I think that's actually the smaller piece of that program. Anyways, there are several comments in there. But the thing that I need to know more about is the extent to which these agencies are all reporting to each other in administering things.
Yeah, that's a great question. And it's a really important point. That if you already have not had great experience dealing with government, then more government in your life is not necessarily welcome. And the short answer is that in many cases, at least with regards to programs like ODSP, it's a one-way pipeline of information. So the Ontario government will issue, like Ministry of Community and Social Services will issue the T5007, send it to CRA, but CRA sends nothing back to the Ministry of Community and Social Services. So the ministry itself does not get detailed information about how many people on their welfare rolls filed a tax return. Now, the individual caseworkers, as you're saying, particularly when there are kids, will drill into the people on benefits. You must file because you have an obligation to seek other forms of income support, namely your child benefit. And you're right, the Canada Revenue Agency would make a lousy administrator for anybody who has a disability. If you just look at the problems with the administration of the disability tax credit, right, and asking people whether or not they can show that their arm grew back, or, you know, anyway, are you still blind, and, you know, those sorts of things. So part of the challenge, I think, here is how do we figure out a way where the information flow still respects client privacy and the opportunity for informed consent. But it seems like it's possible. Like CRA will say, even though we have the 5007, we still can't figure out what this person might be entitled to in terms of their GST credit because they haven't filed their return. We don't know who they live with. We don't, you know, all that sort of stuff. And if you think about any population that is probably the most surveyed in all of Canada, it's people who are on provincial welfare assistance. And so would there not be a way, for example, to make that flow of information be a bit more bidirectional so that the social services could get the informed consent of their clients to say, you know, do you allow us to share enough information that your tax return could just be deemed, and that way we can get you additional dollars? The way that it works with some of those other programs I mentioned, for example, Rent Assist in Manitoba, or PharmaCare, is that either you as the applicant for this new program or service consent to have that administrator contact CRA to verify your income, or you are required to contact CRA and get a particular type of proof of income from the agency directly and submit it as part of your application package. So an awful lot of this stuff, you're right, there are these frictions in terms of the communication between the different orders of government. And yeah, if you have a low trust of government, that can be protective in some ways. On the other hand, if it is creating obstacles for you to actually access the programs and services that you're trying to get, that administrative burden is probably also not enhancing your trust in government either, right? If your whole experience is that government makes my life hard because they have all of these extra forms and steps and hurdles for me. But yeah, it's definitely something for me to think further about.
Do you think the CRA could do a simple nudge? So when they get one of these, what is it, T5007, and they can't match it to a tax file, could they not send them a letter to say, hey, here's a whole bunch of benefits you might qualify for. Please phone us.
So the problem, I guess, there is that they tried some of that, like these letters to non-filers. They'd only get a 12% response rate. The ones that have the simple returns 5% response rate, the hey, please file my return, or please file my return over the phone. I'm sorry, I don't have the response rate on hand, but it was also pretty low. And I think they have been trying those nudges in their own CRA-ish way, which may not be actually reaching the populations that need to be reached in the way they need to be reached. Yeah, and I guess here, even with a nudge, like defaults matter, right? And so if there's no kind of good default, particularly for those people with the simple returns and just social assistance income, doesn't seem like we're going to nudge our way at 5 and 12% response rates annually.
Can I jump in quickly just to ask if there is still a paperwork way of filing, or if it's now they allow still to do that? Do you have a sense of now how much are still doing it on paper versus electronically, or has there been any studies that have looked at whether the demographic of filers has changed before and after?
So there's still a small, I would say, sort of residual sliver of Canadians who are filing on paper. I'm sorry, I don't know much about the composition of the population, but I suspect probably more northern or more rural and maybe older as well. But I think it's down to something in the order of 10 to 15% of returns annually. CRA has already, however, discontinued the practice of issuing paper checks, for example, right? So it's electronic payments only, and their whole efforts in the last 20 years have been to move away from paper returns. The evidence around the Canada, well, what was Whitby, suggested that people who had paper returns were significantly less likely to be getting the benefit, even when they were filing the return, right? Because it was that extra hurdle of having to complete the 42 steps of calculating your Whitby entitlement. So, the change to automatic assessment by CRA for that benefit is definitely an improvement. But it's still, we're still stuck with this issue of making people file in order to get access to that benefit.
Yeah, and which year was it that you could only be reimbursed? So no more checks, no more paper checks. Is it something recent?
I was first announced actually in the sort of the early 2010s, and then it was briefly paused. And I'm going from memory here, having read departmental reports. I do believe that it was within the last couple of years that that the announcement of no more paper checks was made, but I could not say for sure whether it has been fully implemented. So there may still be some paper checks that the agency is still cutting, sort of for previous people.
I imagine that has increased the cost quite a lot, because now people have to provide their bank information, and some may not even have or want to. This is extra information that you don't necessarily want to release.
I suppose it is. I suppose it is additional extra information. That bank information is also required if you want to set up the My Account service, which is the only way that you're going to get your tax return partially pre-filled for you by the Canada Revenue Agency. So for anybody who is totally unbanked, right, or is kind of only marginally banked, this does create another administrative obstacle for them, right, in terms of participating in the systems that CRA has set up.
I do not see hands.
Yep. I might ask a question if it's okay.
Yeah.
Cool. So, we've seen a big increase in the degree to which CRA provided financial benefits over the last year, right? And, at least some of them were kind of universal among the eligible groups, specifically CSB, thinking about that, right? So anyone who was in a post-secondary program or moving from grade 12 to post-secondary was eligible for CSB, pretty much blanket, like no other requirements. And, that kind of led to a pretty big incentive to set up a My Account and and so on. So I mean, that might see like you would expect, I guess, that group should have lower non-filing rates later on because we've overcome at least one barrier to doing that. Might be interesting to see what happens there. But more generally, like, I mean, we talk about trade-offs between the trust in the system and the ease of the system, right? So if you've got a system that provides a lot of information to the different parts, it's easy to pre-fill the forms and then the cost of tax filing goes down. On the other hand, you might worry that people get turned off by that they think that there's a bit more surveillance than there is. But I mean, do we really have any evidence on that? My priors kind of end up being that they're complementary more than anything, not substitutes, right? That you make filing easier and the government provides some sort of, well, CRA provides some sort of services to you. Both those things should increase trust in the system. But they also require more which would normally decrease trust in the system, right?
Yeah, I mean, it depends on, I guess, how can I put this? It seems, I think, if we sort of compare countries where there is that greater degree of information that is just automatically given to the tax agency, but then the burden on you as the taxpayer is also alleviated. I wonder to some extent whether it's also a bit of path dependency, right? So in an awful lot of those other countries, like I'm thinking like New Zealand, Ireland, most of the European countries now, for the longest time, their tax administration systems were basically, they weren't pay as you earn, and it was largely a lot of paper, and you had to pay your full tax liability in one lump sum. Right? And so then when they modernized, they seem to have taken advantage of this opportunity to build in an awful lot more efficiencies, I think, on both sides. Whereas here in Canada, we've had this system of voluntary self-assessment and pay as you earn since like pay as you earn came in the 1930s. So I wonder to some extent, if we were talking about reforms, but without that many years of experience with the system that we have, would people be more open to changes? It's a really interesting question, and I think fundamentally it's isn't it? I think it was Darren Asimagu has done some work on this issue around trust in government and responsiveness, and that if government feels far and administratively difficult to deal with, then actually trust in government ought to be going down, right? And that, so that sort of the worst case scenario is like the typical Department of Motor Vehicle Services that is awful to deal with, far away, really inaccessible, and doesn't give you anything that actually you particularly want in the first place. I think CRA, having built itself up as that collections agent that is aloof and remote, but is, you can trust them to collect the dollars. I wonder if they've actually undermined that possibility for being trusting in terms of providing a service or a benefit to people.
So
I was just Googling quickly, I was curious, I had no idea, but I just Googled quickly how many people don't have a bank account in Canada, and it says 3% of all Canadians. It's about 1 million people have no bank account.
So that's possible. That's possible. The estimates that I had seen is that it's actually probably down to less than 1% who truly don't have an account. But there are maybe people who have an account but just don't have much by way of attachment to, like they don't use that account very frequently, or they don't have much by way of banking services that they're making use of. I'm thinking through some of these questions that have come up around trust and willingness to share information with a government agency, especially if it's a government agency that then might also share it with other agencies. And I guess this is also reminding me of just since we're talking about access to data and so forth, this is also reminding me so much of the political brouhaha that came up you know, with the long form census, for example, with questions around could StatCan sample de-identified bank information, you know, as a new form of information for surveys. I don't know. We just seem to have this sort of repeated aversion to, you know, providing more information to government. And I don't, yeah.
But I mean, I think part of that is because they use it against you. If they use it to do something that helps you, like make your tax filing easier, just like that simple, right? Look at the degree to which we don't care at all about privacy for any of our internet life, right? Because what do we get? A nice way to share photos with our family, right?
The convenience.
I think people are willing to pay for in a bit of a loss of perceived loss of privacy that's really not that big if there are other factors that they trust or if they get other things out of it.
So it's almost
sorry. I see it's 3:30 and I'm happy to continue the conversation, but I just want to make sure that everyone is feel free to leave. Just don't want to hold on. If anybody yeah, so but sorry for interrupting. I think I see another hand, and of course you as well, Jennifer, you might have other commitments, so I feel free to say as well.
I'm okay for a few more minutes. My child has arrived home from school, but that seems to be going okay. And I have family arriving from out of town, but they've messaged to say they won't be here for a little bit yet. So I have a bit more time.
Okay, I thought I saw Mika with a question, but now he's.
Can I just ask a really quick one? Because so I'm sure when you looked at how the poverty rates are affected by this, the estimates of the poverty rates are affected by the non-filing, that was individual level poverty rates, right? Individual poverty, not family level.
Right. So this is head counts of people who are in households that are in poverty. Yeah.
Right.
Yeah.
And it's it was, you mentioned you're going to focus on the working age population at some point. So those poverty rates are for the working age.
Yeah. So all of the numbers I showed you earlier for just the 18 to 64.
So the quick question is, do you know if that difference, if it goes up a lot more, if you just focus on the child population?
So I was able to look at, well, I've got it here, that like just the, you know, at least the count of kids. I mean, it's like it's 34,000 more kids end up in poverty, right? Which is like, it's not nothing. It's not nothing, right? But
does that mean that it matters, this non-filing issue, it matters less for families without kids? That it isn't changing it as much number? Because I don't know what the denominator, does the poverty rate increase by more, the child poverty rate, than this rate?
So it does make sense. It does. So the child poverty rate does not increase hugely, right?
Okay.
So because like the, you know, 34,000 kids out of the total population of kids is not massive, right?
Yeah.
And again, this is if you include their non-filing parents, but take away the child benefit and all the other refundable tax credits that family is now not getting because they didn't file. But because we know that people with kids, particularly moms with kids, are more likely to file, you're not going to see as much sensitivity to the child poverty rate just because they're with people who are more likely to file because the value of the child benefit is so great. Right.
That makes sense.
Yeah.
That makes sense. Exactly.
Yeah. But if I were to recut this and probably do this just for single working age people, you know, that's where you probably would see an awful lot more of the sensitivity. Yeah.
Yeah. Okay. That makes sense.
Oh, you're on mute. I can't hear you.
Oh, sorry. I was laughing. So, yeah, I don't see other questions. Nope. That was great, Jennifer. Thank you very much. That was very informative, very clear.
My pleasure.
Very interesting. And also, yes, I look forward to see more from your, after linking with Lisa, you might be able to say more about maybe occupations and other kinds of information that we might get from these people.
That's the
Yeah,
hope.
so that would
That's the
be
hope.
interesting.
Yeah.
Okay.
Thank you. Well, thank you again. That was a really nice opportunity to be able to present this work, and I really appreciated the comments and questions. That was really helpful.
Well, yeah, and thank you for your time, and have a good Friday, right? Happy Friday. It's
That's
it's Black Friday.
Oh, right. Yes, we're all
Yeah.
missing shopping
Enjoy.
opportunities.
It was
All right.
nice to
Thanks,
see you.
Jennifer.
Thank
Nice
you.
to see you all. Take care. Bye-bye.
Have a good weekend, everyone.
Yeah.
Bye.
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 Yeah, American holidays, I don't care. Oh well. Thanks, Stephanie.
Bye,
Nice
Christine.
work. See you
Yeah.
later.
Yeah, see you. Bye-bye.